Okay, so onto this one, we are going to dig into Active Traders platforms, which is basically Active Trade's native platform and the one you're going to use if you intend to sign up for the affiliate program on the website. The affiliate program is basically some new stuff I brought to you guys to avoid some who are low cap users to suffer from paying indicators monthly if they simply can't afford that. It still has a reasonable price, but a price still, which means there are some conditions for you to trigger the affiliate program, and the most impactful one being that you still need to open at least a $1,000 GBP or Euro account in value, which is still, for those who are the lowest caps users among the community, something. So if that's too much for you to handle, then, well, I'm sorry, but you're definitely gonna have to go with the free indicators plotting stuff. And like we've stated before, it's still something you can do, and it still allows you to use the strategy damn efficiently. Okay, so there's a solution for everyone. But I think that normally with the multiple sets of options that are given available to the traders out there, normally everyone should find its way into the strategy. Whether that is low cap users with manual plotting free tools, or mid cap or intermediately capitalized users that will either use the monthly recurring payments or the affiliate program. Okay. So if you go for the affiliation, this is the video you might want to look at, because that means you're going to use a new platform, something that you might not be familiar with. And even though this is a new platform, you will pretty much see quite some similarities with this stuff you might be familiar with already. But this is going to be a bit more complicated for those of you who are crypto aficionados, which just basically never traded anything else but crypto. And in that perspective, might be some new stuff that we're going to talk about today. All of the things about different margin managements and so on. These are the things we're going to talk about today. Okay, so I've used the demo account in here as a reference because we're going to open some random trades. I really don't give a fuck about buy or selling. It's just to show you how order placement works and so on. Okay, so basically once you've used the website to sign up for the affiliate program, there is basically just a form and a link to follow to open your account. So you fill the forms into Active Trade's website to open the account. They will verify identity because, of course, despite crypto, there is KYC everywhere, okay? So if you're not fine with KYC, then just pass on the affiliate program because, of course, KYC will be required to trade regular assets. Okay, so once a KYC is performed and a few questions, normally your account should be ready to open. Afterwards, you're going to have to fund the account with, like I said, minimum 1,000, either that is dollar, euros, or pounds, depending on whichever currency you want to fund with. You must be a newly registered user, and if you are already trading with Active Trades, there is still a possibility to link you up as an affiliate user, but you have to reach out to me personally. There are some countries that are not working with the affiliated program. There is a list of available countries inside the website, okay? But normally most of the locations should be covered. All right, so that's for the standard things. So now that you've opened your account, funded it properly, there's going to be the most important questions coming right after. How the hell do I use the platform? Okay, so this platform isn't going to be a complicated stuff. It's just that, just like using free indicators out of the indicator, you're going to have to find the translations of stuff you were familiar with before. Okay, so it shouldn't be too complicated. Of course, you understand that this is your list of assets that you can easily switch on. This is your chart, this is your positions, and so on. I should be able to switch the language, basically. Let me just put it into plain English. Yeah, okay. All right. Okay, so list of assets. You can choose between two options. You just got a blank list or you get the list added with the proportions of traders' expositions to this market. Remember that when you have a clear asymmetry, means you might not really want to gamble onto the crowded side. Okay, this is just an indication. That don't mean you need to bet against them, just means if there is too much asymmetry, be wise enough to ask experienced traders. Otherwise, it's really easy. Okay, so the chart, you can open multiple charts, you can have multiple charts at once, okay, with multiple setups and so on. Okay, it's pretty damn easy if you want to close one. Okay, so all of the basic stuff you need with a good platform is there. Okay, you want to hide the list, you can do all of these general stuff things out there. We can resize and so on. Okay, so what we're going to care about doing now is that this is where your balance is, okay, and so on. So there are a few things that you might want to be aware of. If you open the account in Luxembourg, you're going to be affiliated as an European broker. Okay, so the thing is, the affiliated European brokers have some rules to follow. Basically, the ESMA, regulated broker financial conditions, which means you're going to have some securities. Okay, there will be segregated funds, which means the funds are into an account that is not belonging to the broker. It's in a bank account not to your name, but it's a bank account in which the broker can't do anything but having access to. The account doesn't belong to the broker. Okay, so the broker only has the ability to perform trading actions on your behalf and nothing more. So this is what we call segregated accounts. Okay, so they can just run away with your fucking money just like scamming brokers will. Okay, so this is a definable security for you guys. That's the first thing. The second thing is that you will have what we call a limited account, which means anyhow and anyway, even if things end up being shitting the fan, there is definitely not a chance you will ever owe the broker anything. Okay, the worst case scenario is you lose it all, period. Because there are some other countries in which you can have some debt to the broker. So this is never going to happen. This is one of the securities you have. Of course, this comes with downside probabilities along with it, which is in Europe, you're going to have limited leverage. Okay, going for the wild stuff of 1 to 200 leverage position you have on crypto markets is definitely not going to be available out there, which means you might want to pay attention to your margin levels. The way you're going to be doing it is pretty damn fucking easy, and to be honest, that's by far the smartest way I've ever seen a trading platform pulling the margin visibly for the user. Okay, this is where you're gonna go. Okay, right up here you're gonna get this circle line which highlights what you need to know about your margin level. Currently we have no position open, which means the blue circle is our available margin, free margin. Okay, the margin call is the level in which the broker will start send email to tell you, Jesus, you need to send some money to the account, otherwise we're going to stop you out, which is the level in which the broker closes all your positions and terminates the account. Okay, so margin call in here is upon volatility conditions, they will start closing some of your positions, okay, at the margin call level in here. So here you just receive an email, here your position starts to be closed out, here is, god damn it, everything's out, we stop you, and eventually there will be some money left for you to cry on. Of course, this is where you never have to go, it shouldn't be there, it's okay. Okay, so deal with your margin with proportion. Don't be dumb enough to go low margin levels. Okay? Of course, as I said, you have limited margin use to 130, which means if you open dozens of trades with a limited account, you're going to have some running out of margin proportions. Though don't pay attention to this, not to open too many positions, and always check the account's margin. All right? Are we agreed with that? But this circle in here is by far the smartest way to understand what the hell's going to happen if you do not manage your margin properly. All right? Always look at that thing. Next, if you open a position, it's going to be damn easy, okay? So let's take an assumption and we're going to trade the S&P 500. Just right-click the S&P 500, symbol specifications, and you have all you need. You always want to do this first before trading any assets in the list. Until you get familiar enough with this thing, if you trade the same asset over and over again, you don't have to do it every time. But until you know that by heart, you really want to do this, okay? What that means is that the contract size is $1 US, which means for the S&P 500, which we're going to open now, I don't know if we can drag and drop. No, we can't. So we're going to close this one and open a chart. Okay, so this is our S&P 500. We're going to full screen it. Okay, this is our S&P 500. You got the time frames in here. You can easily switch, okay, if you want to pull in and out this thing. Okay, so S&P 500, symbol specification, 4,301 points, okay? Each point costs $1, all right? This is a point-related stuff. The spread is floating, which means the spread is this, the green line and the red line. You might not necessarily see it, so I'm going to zoom in into a smaller time frame. Okay, you can definitely see that there are two lines in here, a green line and a red line. So this is floating, means that this is not a fixed spread. Okay? The spread oscillates across volatility. The more volatile the asset turns out to be, the bigger the spread will be. This spread is what the broker takes as fee for the transactions. Okay, so there's no going to be like BNB fees or whatever. Fees are included in the trading prices by marking up the asset prices. Okay, which means the real spot price is not the one you trade. You trade a markup and markdown corresponding to these red lines and green line, which means when you buy at the green line. When you sell at the red line. So if you were to immediately buy and sell the same assets, you would pay this difference, which is the one we call the spread. This is the broker's commission. Okay? The minimum volume tells you how much lots you can trade as a minimum size. Okay, that's basically it about. There is no maximum value for this asset, and the swaps are overnight fees for leveraged positions because you're using margin on each and every position. Okay, there is a 1:30 ratio, which means if you open a $3,000 position, okay, nominal size, $3,000 size on position, the broker will lock up $100 of margin corresponding to the 1:30 margin ratio, and the rest of it, the $2,900, will be lended, okay, borrowed, sorry. So basically you're gonna have to pay interest rates over these things, but not the fancy fucking 50% fees that Binance takes over yearly interest rates on your borrowing costs, to the 1 to 200 ratio of gambling leverage they offer you. In here you're limited 1 to 30, which is far more than enough, and the interest rates are definitely not the same, okay? So what that tells you is that each and every year costs you 1.80%. Okay, this is the swap you pay if you are short in the market. This is the swap you pay if you are long in the market. Okay, this is divided by 360 days, and this is paid each and every night. Okay, is this a question? Is there any question about that? It needs to be understood. Okay, rollover is no more than, yes, 2% of the margin paid. Offered by the broker. So you have $100 that is financed by your own capital, $2,900 if you have a $3,000 position on the market. these $2,900 will be paid a 2% interest rate per year, as long as you hold the position open, okay? And this is paid every night. If you go in and out in the same day on the intraday session, there are no rollover costs, okay? This is what we call swap costs, okay? So when you trade with CFD contracts, you do not buy anything, okay? You are just going for derivative contracts, just like futures and so on. This is a contract between you and the broker, okay? And the broker takes money from you out of two ways. The first one is the swap. The longer the position is open, the more money they make out of interest rates by lending you the money you need to pay for the open position size. And the spread, which is commissions. Okay, the spread is the commission. The swap is the borrowing cost. Are we all agreed with that? No hidden fees, no whatever shit that is. This is how it works with CFD brokers. You pay them two ways, commissions and overnight fees. Okay, so now when you open a position, you're going to find these things fully transparently visible to you. Commission is what you pay in and out the position. It's what you pay. Half of it is opened at the position. The other half is when you close it, okay, because the spread is you buy at a higher level than the one you sell, okay? So as you take a trade, you go in and out, okay? So the commission is fully calculated when you take out the trade, okay? I don't really know how it's handled in real time, but I think half of the commission is displayed when you open the trade, the other half is displayed and finality is settled when the trade is opened and closed. Okay, so this is all about it. Okay, now let's open a trade so you see what the trading functionalities are. So first and foremost, before trading, we're going to have to set for an asset class list, which means this is where this broker is by far one of the best, in my personal opinion, regarding the low costs, is that you're gonna get a freaking load of tradable assets. So when you get started, because you are a crypto aficionado and something like that, meaning you're not really familiar with forex, I definitely don't want you guys to go down exotics or minor pairs. You stick with the majors, and to be honest, you really don't want to add up to the ones that have already been set for you. So stick with the 6 major pairs and don't add any forex pairs, because they are some fundamentals and interest rate stuff that you don't necessarily know about the forex, and I don't want you to discover them the worst possible way, okay? Coming along with all the derivatives, we got metals like gold and silvers. You're gonna get a shitload of indices. You get both futures contracts in here. Okay, so these ones have expiration dates. These ones are expiring on the quarterly expirations for September. Okay, these ones have monthly expirations, quarterly, okay? So learn about expiration if you don't know what this is all about. But these guys will have no swap fees. The swaps are included into the futures contracts prices. Without going into too many details, basically if you use derivative indices of a futures, basically the swaps are included in the price, which means the spot price that you will get with these guys, cash indices, regarding future ones, will slightly differ. Let me just give you an example. If I were to use the USA Tech versus the USA Tech spot, okay, you'll see that there is a bit of a difference, okay? USA Tech and USA Tech September don't have the same price, okay? There's basically a $10 difference out there, okay? This is due to the expiration dates. Basically, the swap fees are indirectly paid on the asset price, okay? So don't be surprised if you see 0 swap fees on the futures contracts. But the thing is that these guys will terminate at the expiration. Okay, when you reach out the expiration date on September, the contract will be closed whether you like it or not. Okay? Where the cash assets will be paid daily rollovers to the levels you've known and that you have on the contract details. Okay, that will be daily paid, and these guys never expire. Okay, these guys terminates the trades when you close them. So in the beginning, I strongly recommend you not to use futures contracts unless you are experienced enough. Okay? You've got some other stuff, okay, though I recommend sticking with cash indices. You've got financials, euro bonds, okay, you've got lots of things. You can use the USD index, you've got the VIX, you've got the T-bonds, you've got the minimum stuff we need, okay? So this is quite good because you've got quite some assets to trade, okay? You've got some commodities, which I do not recommend in the first place. And this is where the most important stuff is. I think you're going to have to pay for a €1 fee per month for something like that. It's a few euros per month. If you want to get access to real-time data for shares, you reach out to your account supervisor if you want to have details about that. Don't want to bullshit because I'm not sure about it. Okay, so you've got lots of shares in every part of the globe, okay? This is definitely not all of the shares available out there, but the biggest ones will be available, and this is more than enough for you to start trading with. You've got ETFs access as well, okay? You don't have all of them, but you've got the sectors indices, okay? Like you've got SPY, you've got XLE, energy, financial sector, utilities, healthcare. So, okay, you got plenty of stuff to work around. Most of the interesting stuff is available, okay? So regarding the fact that this is probably the cheapest ever broker fees I've ever seen in my entire career, looking at a broad list of assets like that is just a very perfect match, okay? Very low fees and still not the broadest asset list, but far more than enough for you to start with. No, there is no depth of market. If you want a future account, go for a future broker, okay? This is CFD contract anyway. You don't access to the future market. This is just you have the futures market prices to deal with, which we explained is a slight difference from the spot market, but this is definitely not direct access to futures contract. This is a CFD broker. Okay. Okay, now to the chart part of it, which is important because when you trade, you need to be confident enough with the platform you use, and this has to be practical. In that perspective, I definitely think that they have done quite a good job. I came across multiple platforms in my entire experience in CFD brokers. This is not the best platform, but like I said, regarding the free access, the tools we have in here are all the requirements. All of the basic requirements are there, not to say that there's some really smart way of representing stuff that I like. So for risk management and limitation, this is not the most fanciest platform out there with lots of advanced complex features, but all of the basic is there and it's pretty damn well presented to you. Okay, so let's go along with this. What do you do to place a trade? The simple and easiest way is to place the volume in here. Remember that the volume is set in contracts. So in here we're using the USA. So before trading anything, go for the symbol specification. Contract size is $1. Okay. So the minimum contract size was 0.5 lots. Okay, so you're gonna say 0.5. This is the minimum. Okay, come on, boy. 0.5. Okay, this is the minimum contract size. When you start trading with a broker, don't be dumb enough to open bigger positions than the minimum requirements. Okay, get familiar with the platform first, and that means risks upon making mistakes, fat fingers, whatever. So always brace for the smallest ever position sizing when you get started. Even if you open an account with more money than that, always go for the tiniest positions first to get familiar with, and then you slowly but steadily increase to your strategy leverage. Okay, so when you open the position, if you want to open with the spot market, if you want to open with a market order, you can use it with this thing, which I strongly recommend you to do not use, and instead always use limit positions, okay? If you still want to use it, that's possible. Okay, let's take a perspective in here. Like I said, don't mind me. I'm going to go for a market without caring too much about the prices. Okay, so what matters now is very important. Before going any way further than placing an order, I want you guys to look at this. This is the nominal position sizing of your trade, which means, okay, remember that you've got 1 to 30 leverage ratio, which means the broker will take 130 out of this number and flush it out the balance as margin requirement. Okay, so get familiar with these numbers. If you have a $1,000 account, if you see anything bigger than 4,000 or stuff like that, means you're going wrong with the position sizing. Okay, so always pay attention to this. The level should be out of a $1,000 account below 3 to 4,000. Otherwise, you're using inappropriate position sizing, which will seriously reduce your margin. Okay, so most of the time go for the minimum position sizing and it should be enough. If the minimum position sizing goes beyond 4 to 5,000, then trade another asset, okay? In here we take this example. Even if that's dumb to buy now, let's go for a buy price. Okay, so we just bought, okay? If you go into this, you have the position sizing and the current profit to loss. The gross profit. Okay, so now if I click on the position, we just added stop loss and taking profit, which is how you easily manually set your stop loss and take profit levels. Okay, if you double click on the contracts, you'll be able to see how much they represent. Okay, so this is what I like with this platform. It's damn easy for you to figure out everything about it. Okay, so in here you have got all of the profits in euros, prices or points. Of course, what matters to you is euro. Make sure you never lose more than 2% capital. Okay, so in here my maximum loss would be eventually minus 20 euros. And why the hell is it invalidated? What the hell is that? Why isn't it working? It should work. Oh. Okay, what the heck? Come on. Why is that an invalid value? Okay, so we've removed the stop loss. Okay, anyway, so make sure you respect your risk limitation. This is how you're going to perform this thing. Okay, always make sure you do it well and that you do not outperform your risk limitation. Now, always after taking a trade, look at this. This is where you see the appropriate margin that has been locked by the broker. Okay, the margin taken for this trade has been $91. It's represented as this this gray level added into this, which means on top of this margin requirement, which do not move, okay, you will have some remained margin for your profits and loss to be added or removed, which means if you're making losses, this goes down, and this must never go down to this row. Okay, that's why margin should be maintained healthy level. Never use more margin than half of your account or you're in great danger. Okay, this is the way it goes. This is really that easy, guys. Okay, so it's not that complicated. You've got all of the advanced functionalities, like if you want to open a stop order or limit order, just do it that way. Okay, sell limit. Okay, I can set my stop loss at 20 Okay, come on. Sorry, just a cat in the middle. Okay, for example, I want to take a profit after 20 euros. Okay, the expiration GTC means good till cancelled, which means the order will remain active unless you manually delete it. Otherwise, you can set an expiration date, for example. Okay, you set your volume in euro. Okay, this is in here in euros or lots. Okay, I would go, for example, in this for a €1 lot, one full lot. Okay, it tells you the point is 0.85 euros per point. Okay, which means this is the account. This is the marginal value. This is the nominal value of your trade, 5,000. Remember what we've said earlier. So normally you shouldn't trade one, but I'll explain why I do it. Okay, I'm placing the order. Here it is. Normally I can adjust it. I'm going to adjust so I'm going to be filled. Okay, one another thing, okay? You remember the two lines, the green line and the red line. Remember that you always sell at the red line. So now, as you can see, the green line got above my level, but the red line did not. So I'm still not in the market. I sell at the red line. So once the red line will be above this level, I'll be executed. Not before. Even if the green line goes above, I trade short at the red line. Okay, always make sure you understand that. Okay, I should be filled pretty soon. Come on. Okay, here I am. So now I should be filled. Okay, I'm filled. All right, now I've got my short position. I'm going to close the long. We don't need this one anymore. Okay, what I wanted to show you is, of course, the 0.5, the half a point, half a contract bullish position we had earlier, okay, was the minimum size for the contract. Remember, minimum size, 0.5 lots. So this is why I will show you how to partially close a trade. Okay, so in here, when you go to positions, okay, you're gonna get 3 dots down there, which means if you want to partially close the position, this is where you'll be able to do it. Okay, this is where, and only occurs when you have more than the minimum position sizing. Okay, so this is why I got for 1 lot in here. If you want to partial close the position, this is where you do it. Okay, so current volume is 1. If you want to close half of it, you go for 0.5. Okay? Are we okay? All right. So if I do this, I can close half my position. That's it. Now I only have half a contract remaining. All right? So remember, we were risking 20 euros stop loss. Now we're only risking 10. Okay, because we divided the position sizing by 2. Are we all agreed with that? So, as you always make your analysis in TradingView, define the risk limitation. Normally you should know where to put the stop loss and so on. Okay, so this is how you do this thing. Okay, set the stop loss to the risk levels you wanted. In the first place, always go for the tiniest position sizing, and as you won't be able to partially close the trade, I recommend you do an alternate risk limitation. So let's take an example in here. Okay, if you want to zoom in and out on the margin, go for a right click. Okay, right click will do this, left click will shift. Okay, and of course the mouse wheel goes for scrolling and zooming. Okay, so let's assume that our trend channel was going down this road. Okay, so normally validation for my trade will be retracing down to this trend channel. So as I cannot take half of the position away because I already am at the lowest possible exposition, I still need to do something out there. I could, for example, set an alert on my TradingViews platform, and whenever the market reaches out the trend channel, I can do an alternate risk limitation by, for example, going out there, taking my stop loss and putting it above the market top that would have been made. I'm lowering the risk I take, either by taking some partial profits or reducing the stop loss, but I have to perform a risk limitation. Okay? So that's the way I recommend you guys to start trading safely with this new broker. Get familiar with CFDs, commissions, swap, and stuff like that. Remember that the affiliation is based upon commission only, which means if you use all your margin into a couple trades, that wouldn't necessarily mean the commission side will be met. The swaps are overnight fees that do not count. But making $50 commission isn't going to be that complicated. It just means you need to trade, not too much, but not too little. Okay? If you want, the best things I recommend you to do is not to give a fuck about it in the beginning. Don't give a fuck about commissions. Focus on your trading, on your analysis, and so on. Okay? Get familiar with assets you never traded on. Make sure you don't bullshit with the position sizing and stop losses. Do your damn job and try to do it well. Okay. Then, what I recommend you to do is, as you started your first trade, the 90 days counter will start as well, which means I suggest that either 1 to 2 months before the first trade you take, you put an alert into a calendar or whatever that is to make sure that 2 months from now you will check on history to see how much commissions you have triggered so far. Okay, how much an average position commission costs in commissions and so on, and check on how far you are away from the $50 required to validate the affiliated program. If you are too damn far away from it, as being already 2/3 from the available time you have to validate, that means eventually you should consider trading more. Okay, so that means eventually, in order to complete the affiliated program, which is the goddamn goal, because otherwise you're going to waste it, which is a damn stupid thing to do, that means you might eventually consider going short term. Not over trading, not over leveraging, but just eventually going short term for the remaining 30 months, so at least you complete the goddamn thing. Okay, that just means you need to trade a bit more. Trading more generally means going shorter time frame, still applying your risk limitations, still going for tiny position sizing to preserve capital. Just means if you're late with the affiliated program, you need to trade a bit more without going excessive, because damn it, $50 of commissions isn't complicated to achieve. Okay? Are we all fine with that? Normally, you should be familiar with all of the aspects of these trading platforms. You should be able to place a trade without too much doubt, without fears. You should be able to figure out where the commissions are calculated, what they represent. You should be able to figure out what a swap is. You should be able to figure out whichever stuff you might be doing with the platform. All right, so it looks like we're good enough to terminate this recording. So, of course, if you have additional questions, feel free to ask them into the Discord. Normally, other users should be able to answer these. Otherwise, I'll try to do it myself. That being said, that's going to be more than enough for today. Bye, guys.